Why is forecasting crude oil demand so difficult? Imagine trying to predict how much gasoline will be used next year when so many things can change overnight. That's what makes forecasting crude oil demand so tricky. It's like trying to hit a moving target that's constantly shifting. First, the global economy plays a big role. When economies grow, people buy more cars, planes fly more often, and factories produce more goods. But predicting economic growth is not simple. It depends on many factors like inflation, trade tensions, or even financial crises. If a big country like China slows down unexpectedly, oil demand can drop sharply. That unpredictability makes it hard to know exactly how much oil will be needed in the future. Next, politics and conflicts in oil-rich regions add another layer of uncertainty. When there are wars, sanctions, or political unrest, oil supplies can be disrupted suddenly. This can cause prices to jump or fall quickly, which then affects how much people want to buy. These events are often unpredictable and can change the demand outlook overnight. Energy policies and new technology also influence demand. Governments are pushing for cleaner energy sources and electric vehicles. These changes can reduce oil use over time. But how fast these policies are adopted varies from country to country. Some nations might switch quickly, while others stick to traditional fuels longer. This makes long-term forecasts complicated because the pace of change is uncertain. Oil prices themselves are a big factor. When prices go up, people might use less oil or look for alternatives. When prices fall, demand can increase because oil becomes cheaper. But predicting price movements is difficult because they depend on supply and demand, inventories, and even speculative trading. Small changes in prices can have big effects on demand. Producers also influence demand indirectly. When organizations like the Organization of Petroleum Exporting Countries decide to cut or increase production, it impacts supply and prices. These decisions are often made based on market signals, but sometimes they surprise the market, making demand forecasts less reliable. Finally, data limitations make things harder. Getting real-time, accurate information on how much oil is being used, stored, or produced is tough. Sometimes the data is delayed or incomplete. Forecasting models have to make assumptions based on this imperfect information, which can lead to errors if conditions change unexpectedly. For investors, these factors mean that predicting future oil demand is always a challenge. It's important to keep an eye on economic trends, geopolitical events, policy shifts, and technological developments. Using a mix of strategies and managing risks carefully can help navigate this uncertain environment. In the end, the difficulty in forecasting crude oil demand comes from how many different and unpredictable factors are involved. Economic shifts, political unrest, policy changes, price swings, and data gaps all combine to make future demand hard to pin down with certainty.